Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to dive into Aurora closing a debt financing round of almost $250 million, as well as boom times in hemp as farming quadruples this year. What that's going to do to pricing? Well, we've got Dan Chemist, our CBD correspondent with Good CBD Products, to help break that down.
Boom. I'm here, Chronic.
So this Marijuana Business Daily article about Cannabis closing its largest debt financing round as Aurora closed an expansion loan with three of Canada's largest banks, making it the largest non-convertible debt facility in the cannabis industry to date, according to analysts. So according to the Marijuana Business Daily, Aurora said it closed terms worth an additional 160 million Canadian dollars with a syndicate of lenders led by the Bank of Montreal, plus an option to upsize the facility by 40 million. And so that's an additional 200 million in credit facilities that Aurora secured last year. So the total debt deal now worth as much as 400 million is one of the cannabis industry's largest debt arrangements, as large as cannabis firms in Canada turn to traditional lenders. And that's what's really fascinating about this, is that debt financing is very it's normal in the regular world, not so much in the cannabis industry. What you normally get is equity. So you'll get some shares. That could be a convertible note. So it's a personal debt that converts to equity in the eventuality that you generate revenue or go public. But when companies are all out getting debt deals of $500 million, that's very abnormal for the cannabis industry. That's either speculative or incredibly confident, knowing that there's property, plant, equipment, licensing, revenue, all of those opportunities to get your money back. So Aurora's debt facilities consists of 160 million in terms of loans announced in August. They have an option to upsize the facility by 40 million, and then 200 million in credit facilities announced last year. So the terms of the revolving credit facility mature in August of 2021. It's only 2 years from now, so they're expecting to get that back fairly quickly. So Aurora is a company with significant amount of fixed assets, so that gives lenders comfort given the debt to secure those assets. They believe it's the largest non-convertible debt facility that we've seen so far this year, and a concentration of capital flows to the larger operations because they've developed their infrastructure and staked a claim in some pretty material market shares. So Canadian cannabis firms raised a record $12 billion last year to expand domestically and overseas, including initial public offerings, private placements, equity, debt, and strategic investments. A lot going on, a lot moving, and definitely a lot coming back to the U.S. in terms of hemp.
You know, this is what I've been waiting for, is to see it go from cannabis business to business, right? And this is just kind of the harbinger, right? It's just the beginning. But ultimately, at some point, things like needing to be, I guess, what you'd consider a specialty niche business, again, cannabis is just another commodity. Hemp is just another commodity. And in the world of business, it would make sense that we're finally starting to see that reality show itself.
Definitely. It'll play out for the rest of the people who maybe aren't paying attention. It'll be brought to the forefront and shoved right in their face as you're seeing quadruple amount of farming for hemp this last year. So a report from 2019 U.S. hemp license report, according to Zero Hedge, says that the number of acres of hemp licensed across 34 states totaled 511,000 acres this year. That's a 455% jump year over year. So state licenses to produce hemp were issued to the tune of 16,877 farms, a 476% jump. So breaking that down, you have 511,000 acres, 34 state licenses, and almost 17,000 state growers. And so, I think I mentioned on the podcast before that I had to let a client go in Tennessee who wanted to invest $350,000. It was his entire retirement. And I just said, nope. I am not going to help you grow hemp when you don't have enough money to get started and the prices are going to go down. Totally convinced that prices were going to stay at $7,000 a kilo. That was 2 years ago. We're seeing them around $3,000 now. I believe they'll be around $1,000 before the end of next year. And so if you aren't switching to other derivatives or, rare cannabinoids like CBG, CBN, THCV, you're probably going to be out of business, or at least struggling to try and recoup some of your initial capital.
Yeah. It's funny you should talk about this stuff. As you know, I am your roving CBD reporter. I've been on the ground in Oregon a lot, right? So for what it's worth, Oregon has about 8% of those 511,000 acres. They have 62,000 acres under cultivation right now, right? So I've been down in Oregon visiting hemp farms where there's a little over 1,800 hemp farms. Okay, I'm tied in with the Oregon Department of Agriculture, so I quote know. Okay, and then on the ground, what's interesting is, again, I mean, this is not a refined measure, but roughly about 10% of those farms are rolling pretty good. Okay. But that means about 90% of those farms are somewhere between almost rolling and not rolling at all. Okay. And so, again, first in Oregon, so that means there's 180 kick-ass hemp farms. It also means there's about 1,600 hemp farms that you could put some form of a question mark next to. And then, again, that's just Oregon, right? That farm bill really did change the game.
Definitely. To put that into perspective, Washington has 85 licenses and can grow 6,500 acres. Illinois apparently just had 18,000 acres pulled offline. So for anybody in Michigan who just got a new license, you might want to look to Illinois to fill that gap. If Michigan is too new, Illinois has been around for a little bit longer, having just gone recreational. And so opportunities there. And the same thing on the West Coast. Oregon has produced too much, and so then there's opportunities for Washington and California, as long as it's not edibles. There's been a ban on edible CBD and beverages as well, so you have to kind of look at what the states are allowing. And in fact, I just got word back from the World Trade Center's export store that they won't even allow us to put CBD edibles online for sale in foreign countries or even interstate in the U.S. because of the Farm Bill specifically doesn't allow for edibles. It's just topicals. And so, we're going to have to kind of wait and see how that plays out.
Yeah, again, I wonder, because personally, the nature of a patchwork marketplace, right? Where, in this jurisdiction, you can sell this, over here, you got to package it that way. And, down around the corner, you can't sell either. It's really, at some point, market forces shake that stuff out. And again, being on the ground, watching it shake out, I deal with people who are impacted at the level of a rule comes out and they might have, boxes down at the printer that are being printed that are illegal all of a sudden, or they just opened a new market and they've been shipping for 2 weeks and all of a sudden the rule change says, no, you can't be in that market anymore. It's again, at a news level, right? At a high level, it's a growing kind of marching forward, interesting industry. On the ground, it is very much 2 steps forward, 1 or 2 or 3 steps backward. A lot of, in that analogy, and doing some disco. It is really, it's a complex game.
Yeah, it's going to be interesting state by state until something federally happens. I mean, looking at the Carolinas, South Carolina has 113 licenses and 3,300 acres permitted. You look at North Carolina, they have 1,500 licenses and 33,000 acres.
Right.
So you literally have 30,000 more acres permitted. And that's outdoor. The indoor greenhouse, or not indoor, excuse me, the greenhouse allotment for North Carolina is 10 million square feet. And guess what? South Carolina has 0. So if you're going to be going into South Carolina and growing hemp, you better look at your neighbors and figure that your prices are going to be plummeted or decimated by your neighbor. And again, if it's not regulation, it's going to be somebody else coming in, being more automated, more efficient, doing it better, or coming in with CBG while you're still trying to hawk your old CBD.
Oh, again, man, oh man. So one of our core functions, this is something Josh and I do a lot, is essentially forewarn from naivety. right? The whole, I read the article. This seems like a, there's big business over there. I'm going to go, farm hemp. Yeah, the lead time on some of these decisions, if you aren't already in motion, I'd stop, check myself, and start thinking about, okay, what's going to be hot in 18 months or 2 years, and look that way. Because again, you're reacting, right? If your answer today is, oh, I should go do some hemp farming, again, it's one thing. If you're smart, if you take a look, you go, well, okay, and I'll do it right, and I'll plan on it being sold cheap. Okay, whole nother thing to look at an article and go, oh God, in 2018, liters of this sold for that. Geez, honey, let's start farming hemp. Just wrong.
Right. If you follow the pack, just like an investment mentality, you're going to end up buying high and selling low. And that's the opposite of what you're going to do if you're in FOMO, or if you're just kind of following what everyone else is doing. So definitely stay tuned to the Talking Hedge as we're kind of leading economic indicators to kind of show you in advance, if not a week, maybe a month, kind of show you some trends. So with that, stay tuned. This is the Talking Hedge. I'm Josh Kincaid. Don't forget to like, share, and subscribe, or don't. And I'm out.